Welcome back, George.
Hey Dale, how are you? I don't think Andre got the joke.
I don't think he did either.
No, eventually I'm not. I'm thinking on something, but I don't want to
okay.
risk.
Well, yeah, a con artist is someone who, misrepresents things, commits fraud. Bernie Madoff was a con artist.
Okay.
Anyway, I have a lot of friends that are artists, right? And I go, hey guys, I know you don't think so, but I'm an artist too. And they go, oh, what kind?
The con artist.
I'm a con artist. Anyway, so George, you want to share your screen?
Thank you very much, George.
Thank you.
And only be a truth teller here with
That's
what
right.
you're seeing. Okay,
absolutely.
buddy.
Here we go.
Yeah, see, Jane knows what a con artist is. She's dated.
Here we go.
All right, George.
All right. So
George, I got your screen, and I was talking about how you really take, and I am Blake, how you really take trading as almost the same type of way that an athlete who has to be in a peak performing state to do his job and excel on the field, that you do the same thing with trading, that you're in the zone. You have to be in the zone to be effective. Am I correct in how I'm describing what's an important part of your methodology is, the physical, the psychological part of this whole tough business?
Absolutely. And if I love reading books, and if you read about Mark Douglas, The Zone, he touches on that point in great details. And he pretty much talks about a holistic approach to trading that encompasses not only acquiring a high probability signal, but also looks back into the trader and how he makes decisions. And if you look at an athletes, they take every aspect of their craft very seriously. From the moment that they wake up to the moment they are practiced, they do actually visualization of them shooting the perfect basketball hoop over and over and over in their mind before they actually practice it live. And that will wire your nervous system in such a way that it becomes a muscle memory. And to be effective as a trader, it needs to be boring. Really.
Routine.
Routine is such a routine that you are expecting the following. You're expecting the signals to show up. You are expecting a flawless execution. Once you make that one decision of an entry, everything else that you're doing needs to be automatic without micromanagement. So this way, emotions does not seep into your decision-making process. And the art of simplicity is how I refer to it. And that art of simplicity has an objective. The objective is consistency, profitability, and longevity in this business. And the way.
So we're all human though, George. You ever blow it? Even though you're all prepped and everything, after the entry, maybe you have some mechanical things that reinforce your discipline. But I make a lot of plans on Saturday. And then when Sunday night, I'll see something that wasn't planned. And to me, that's an impulse trade when I do that, because it wasn't planned before. It's just something I saw. And, this kind of thought went into my head. Hey, you know what? It's a decent shot.
Decent shot.
Yeah. You ever hear that in your head?
Absolutely. I hear it every single day. And,
right.
and the thing about that is, I don't know, somebody who's smarter than me said, no war plan ever survived first contact with the enemy. Because always the minute you encounter action, a lot of things start happening. And how I handle that is in multifaceted way. Is I start my day prepared very well for what to come. Once I start to trade, I have a very specific signal that I'm looking for, and I wait for that to happen. And once it happens, I get in there with that entry point, and the rest of the stop and the target is already figured out, and I try and I walk away.
You do walk away.
I walk away because what happens is if I stay in front of it, sometimes the pressure start to seep into you, and you start trying to save a trade from being a stop.
Right.
And that actually
cancel. You've done it before. Cancel if close. That's when
we
you
all
pull
did
your
it.
stop when it's about to get elected, and you go, no, it'll come back.
We all did it at some point. And then what I did is I looked at my result, and I found out that me doing that always ended up with a net negative for that behavior. So as exiting my stop is almost as a statement that I don't believe in the probability of my system. So if I don't believe in the probability of my system, then why is that?
What are you doing? Yeah.
What are you doing? Because that's another thing that I found out from trading. The minute you micro change one element of that formula, the trajectory of your P&L and probability will significantly shift. Sometimes positive, sometimes negative, but it would not be consistent. And back to the art of simplicity is you are one of your biggest goal as a trader is to achieve consistency. Sometimes you are consistently a negative trader. Sometimes you're consistently positive, but you really need to achieve that aspect of your trading first. Then tweak it and improve it to where the trajectory is a positive one. So for me, I found that micromanagement is counterproductive, and that doesn't mean that things during the day does not happen, but I have mental flags that I have in front of me, and I actually write them on my screen.
Write
them on a key, absolutely a key.
And actually, right, George?
Absolutely. And one thing is I actually make a video of all the best behaviors that I need to exhibit during the day, and prior to the morning starting trading, I actually replay that video.
You brought up stops, George, and I have a joke. Last time I used a mental stop, my first stop was a mental institution. And I recently interviewed Jack Schwager at our Trader Summit, and he has a new book out. I think you're going to like it, called The Unknown Wizards, Traders You've Never Heard of. And there was an example of a guy who made 500 grand off a 500 grand account and gave it all back twice. Okay. And Jack said one thing he said that he learned from that experience: he never, ever, ever will trade without a hard stop now.
Absolutely. And that is the Bible right there when it comes to trading. My job as a trader, and the job of every trader, is to manage risk, and the rest will pretty much take care of it. You have. Go ahead.
No, I'm interested in what's happening technically on some of the charts that you have up there to the left. Those two squares there. What are we looking at? Is that NASDAQ?
Okay, so I'm a specialist at NASDAQ 100.
Oh,
I mean, I pretty much trade that on a daily basis, and I've been doing that for many, many years. And basically, what I'm looking at here, if we're going to go into that.
Okay, so they're all NASDAQ, and the one on the right was what, like a 1 minute tick chart? You're getting every candle.
Yeah, it's not. I don't.
They're Renkos, right?
Renko. So I deal in momentum and in movement. And when you always have to ask yourself a question: what pays you as a trader in the future market? Is it time or is it movement that you get paid on? You pretty much get paid on capturing the momentum and the movement. You buy it at 92, 792, and you want it to go to 820. And once you capture that, that's money in your pocket. And that's so Renko charts actually does a wonderful job at capturing momentum and movement. And it shows you every segment of that fairly clearly. And I've been using that for many, many years with good results.
Can you explain the difference to our audience on why you prefer Renkos over, well, you have some wicks on your Renkos. A lot of Renko people are pretty pure. There are no wicks. So you kind of have a little combination of, what might almost look like a candle and Renko combined.
Absolutely. And this is very specific to NinjaTrader and the system that we have here. And
okay, Ninja.
NinjaTrader. So the beauty of this is actually it shows you the reversal, and it shows you price peaking and reversing, and that's what the wick is. In a Renko bar, a typical standard traditional one, you don't see that.
Right.
And that is actually extra information that I use in order for me to acquire signals to trade off.
So you look for wicks and reversals in the same block, same Renko block for possible turns.
Absolutely. So I'll give you the main signal that I use and the logic behind it and how I go around executing. So it's and part of what we're kind of teach our traders is reduce the noise in your trading and reduce your decision to a singular decision. So this way you can be consistent and look at one thing and one thing only. So this way you relax as your trader. Like one of the things that I do is I turn off the TV. I don't watch CNBC or actually watch the news wire as it comes. I 100% focus totally on that chart when I'm trading. And one of the things that I look for is what we call a captain setup. So a captain setup is a formation of 4 Renko bars in a row that basically the price.
Is that captain, like a captain of a ship?
Yeah, the Captain Morgan, captain of the ship.
Oh, Captain Morgan. Okay.
Yeah, that one.
All right.
So what I actually, the way I came up with that name is the price is capping from moving further. So instead of, capping does not sound good, but captain does. So here you go. The captain setup came about. So this is exactly, we just experienced one right now. So that's actually going to be a great one here. So you see 1, 2, 3, 4 candles in a row where the price tried to break below 767 and a quarter and failed to do so. On the 4th candle, that's your entry, which means that once the price hits that 787 and a half, automatically you have your order out there. And you are looking for a target of 10 points and you're risking 10 points on that structure. So you see this behavior happen on a daily basis. And you always have to ask yourself a question: what's the psychology behind the trade? Why does this structure work in a consistent manner? Is because traders always, you never know where they're going to do it, really, but when they do it, that's how they do it. And they come to price structure or prices in which they just fail to sell it further or they fail to buy it further. And whenever they do it in a row, meaning that the market hit that level 1, 2, 3, 4 times and reversed. Once they do that, they built up so many stops on both sides of the market that the upcoming expansion in price structure is always good enough for you to make 10 points.
Okay, is that someone's asking, is there a TF on Renko? And someone else is saying they're not time-based, they're all movement-based. So there's no time. It's not like a 10-minute TF. There is no time frame.
No time whatsoever. Okay. And that's by design. And
right.
the design for me, which really attracted me to this type of charting, is reduction of noise. Every time you add another element to your decision making process, you add another layer that could go wrong. So if I take time out of my trading and just focus on motion, then I have half of the things to worry about.
That's beautiful. That's a pearl.
There you go.
Trade motion, not time.
Trade motion, not time, not time. So, I mean, I could take you through this and show you. That's one that I traded actually, and that was a good one. And that is a short one.
You're a natural teacher, George.
Thank you, sir. Appreciate it. I enjoy it, and I have a passion for helping people understand complex equations like that, and it just gives me joy. So this is one of the other captain setups that we talk about. It's just they always behave in this exact way, and not only they behave here in NASDAQ, but they behave in gold. They behave in YM. In just about, they behave in the Forex market the same exact way. Whenever they are stopping, that's how they stop.
A chart is a chart is a chart.
It's a chart across
just a different title.
It's a behavior of people. People are behaving. So it's the same concept here. So you got the market ran up to that 144, hit that level. It did it twice, it did it 3 times, did it 4 times, and look at that wick. They actually try to
run stops there.
You run stops right there, and then just failed it. And boy, what did they do after that? From 24, 50 points in NASDAQ.
Yeah.
Okay, so every 10 points is 200, so $1,000 per contract on that move.
Sansi is asking, do you leave a runner or take profit on all at plus 10?
Okay,
when you were talking about that.
Give me a second here. My Alexa is giving me a notification telling me I'm going to trade good today. So I have her programmed talking to me. Yeah. So
give her a kiss.
If I do that, she's going to start talking again. Rather not.
She might short out.
I know, short out, exactly.
So, all right. Well, so George, these captain setups and everything, and your demeanor and temperament, I'm convinced that there are tools that anyone can learn and pick up some different arrows to put in their quill, tools that they could put in their toolkit. How do people get involved with you?
They can get involved with me, but before I answer that, I think you had a question for me from somebody in the audience. So let me answer that part first. And he was asking, do you leave a runner?
Right. Okay. Sorry.
So that runner is I hyper focus on an all-in approach. So basically, because I want to measure my probability very specifically to be consistent. So I go all in, all out. I have a target, I have a stop. Now, when we have a very hyperactive market and the market is giving a lot more than that 10 points, then I go all in on, for example, if I have 2 contracts, I'll take one off, then I'll go break even and just let that one roll.
Okay.
And I will, then I'll have a big target. I'll have a big target because I don't want to give anything back to the market. Once I acquire, once I convert money to my pocket, it's locked in and it's done. It's not going anywhere. Okay.
Like that.
So
I was asked, I've talked about this before, and then maybe we could go to your website. But say, for example, you had a tremendous month or you had windfalls. Do you teach that people should withdraw some capital from their account and possibly maybe, put it into something conservative, touch and feel the money? Because when it's in your account, it's they're just real digits. Yeah, when you touch it, it's real. And even go out and spend it and enjoy some of the fruits of your labor.
Absolutely.
Instead of leaving it all in their account.
I never do that, and I learned that early on in my career that uh, the decisions I make in the market needs to translate into an actual something physical that I need to touch, because then it makes it becomes something solid that I can. It becomes real, like you said.
It's tangible.
So tangible. So 50%. Excuse me, on a monthly basis, whatever I make, I take 50% of that. I put it in my bank account. I ACH it to my bank account. Then my goal for the next month is to make what I withdrawn and add another 50% to it. And,
nice.
And then take 50% of that, and constantly you're taking money as you're pushing your equity higher and higher. But the one important aspect of that is don't chase the money. Don't hyper focus on the money, because the money is a byproduct of proper execution, proper trading. So that's what I'm going to be focused on. But as a byproduct of that, that the equity curve should be 45-degree angle looking up, and within that curve you are looking to take money out at a 50% of your monthly
nice rule.
Yeah. And that keeps you in the game, and because I mean ultimately you're doing this for a living. I mean, that's what we're doing here. And you have bills to pay, you have things you need to take care of.
You have to get paid.
You have to get paid. We spend ungodly amount of hours in front of the screen trying to figure out this game.
Yeah, not getting paid.
Well, it needs to get paid.
And facing losses at times.
Absolutely, and the emotional stress. So this is a very good business, and it needs to be looked at as a business. And at the end of the day, a successful business is paying its employees, paying its bills, and it's paying its owner. And you're the owner of this business. So so
I'm the man. I'm the man, George.
You're the boss.
I'm the
nobody
man.
else is. You hire yourself and fire yourself on a daily basis.
I'm on furlough after we conclude this interview for half an hour. So, so how do people follow you besides your Twitter handle, George, and find out, about, what you charge to teach and what kind of services you offer?
Harmony Trading System, www Harmony Trading System. Let me actually pull the actual website. Here we go. So you could go to harmonytradingsystem.com. That's me in my better days. I got much older after that picture, but I'm gonna keep it.
Was that from high school?
No,
I'm kidding.
No.
I'm kidding.
You could tell that I lost my hair trading, right?
It must have been geometry or something. Anyway, oh look, you're featured all over the place. Money Show.
Yeah, and you got
F.A.C.E. You've been on F.A.C.E. I don't see that up there.
Well, I'm gonna have to add that one here.
Oh man,
absolutely.
I mean, that's how you know you made it.
That's right. If you click on that button, you go to Harmony Trading System, and here you could just sign up. And one thing that I'll do for all the audience in this group is I'll extend them 1 month free access to the room where they can see us in action on a daily basis, no commitments. Also, I'll send them the structure, the class that we teach our traders on the captain setup, so they can look at it in more details with the logic and the rules and see how that will apply to their own trading, and it's going to help them. So when they sign up, I'll get their email and they just send me a note saying I want that class, and I'll send that to them.
Well, interesting you use that word. I say we're all captains of our own ship. And if we take it into the rocks, don't blame anyone else. You had the helm. And George, thank you very much for talking about the psychology. I believe most of this is in our head, and there's a million ways to skin a cat. And appreciate you edifying F.A.C.E. today, George. Thank you, my trading warrior brother.
Thank you. I appreciate you. I appreciate everybody that tuned in, and you guys have a healthy, prosperous trading day.
Thank you, buddy.
All right. Have a good
Everyone,
one.
there's George Habash, and this guy does not trade out of tune. He trades in harmony. So thank you very much. And everyone, that's going to be a wrap. We'll see you for TGIF tomorrow. Mark Newton's going to be back with us. Had some technical difficulties yesterday. So see everyone tomorrow. See Ariel, Jeffrey, Coyote, DJ. And thank you once again, George.
Have a wonderful day.
Okay. Adios, everyone.
Bye-bye.
Don't just count your pips, count your blessings. See you tomorrow.